Okay, so the next thing we're going to do is go in and add in the Series B. Once you learn how to add in the Series B, you'll be able to add in as many rounds as you want because it makes one slight modification in the share price calculations down at the bottom because you have to begin taking each round of financing into account whenever you calculate total shares. And I'll show you how to do that, and then you should be able to do this for Series C, D, E, F, G, however many that you think you're going to have or whatever you need to do there. So let's get started on that. The first thing we're going to do is add a couple of columns here and just name them the Series B costs and then Series B shares. Okay, now I'm going to come over here to my Series A price calcs and I'm going to just copy that and paste it right next door in the appropriate columns, and we'll go ahead and expand it out so we can see everything pretty well. Let's give ourselves a little more room here, and I'm going to change this name from Series A share price calcs to Series B share price calcs. So, you know, what kind of pre-money do you want? Doesn't matter. Let's say 40 million. And then invested funds will come from the total cash in. So we'll let somebody invest somewhere down here. So let's go back over here. We have our Series A VC. Let's add a line in here to give a little bit of room and call it Series B VC. So the Series B VC is going to invest funds somewhere along this line, and we could say they invest $10 million. And I'm just going to make that yellow real quick, just like everything else, just for consistency's sake. And you can go back and adjust your formatting to make it look like mine or however you want it over time. Don't want to spend a whole lot of time on that. Okay, so now we need to go in and do all the other calculations. So invested funds here is going to equal the total invested funds in the round, so the total Series B cost, and we have to go into this cell here and sum up that column just like we've done before. So this isn't foreign by any means. And so now our invested funds is working right there. Then our post-money valuation is working because that formula copied over. Our Series B ownership is working because that formula copied over. And post-money option pool, we can leave that at 15%. So the post-money current is 65. So like I've said before, that is the existing investors. They are now, the existing investors and the founders now own 65% of the company, whereas the new investors and the new option pool will be 35% of the company. So now we need to go into total shares post-financing. So total shares post-financing is total shares post-financing from the last one, this minus the option pool for the last time, and then divide that by the post-money current. So let's do that. So it is total shares post-financing from Series A minus the option pool shares, and then divided by the post-money current. So that's how many shares they had in the last round, and then you're dividing it by their new ownership to calculate the total shares outstanding for this round. So we got 2346, 824, something along those lines. We know our founders shares. Our founders shares haven't changed, still 1 million, so you can just reference the previous cell. And then we got Series Seed investor shares, and that needs to be changed to Series A investors plus seed investors, right? So that's all of them at this point. So the Series A investors plus the Series Seed investors, we need to calculate those, and we can do that simply by going back to the previous share price calculations, the Series A share price calculations, and summing up the Series Seed investor shares and the new investor shares right here. So that's the main difference that you need to notice between each round of financing. You go and add up. So if you did a Series C, you would add up the Series A investor shares and then the new investor shares, or you'd add up these two columns right here, or these two cells right here for this calculation and the next one. And that will grow over time because you'll have more investment if you follow this path. So then our option pool shares are calculated, and then our share price is calculated right here. And then all we do is go up here, just like we've done before, and we reference this share price right there. And then just like we did here, we just take this divided by the share price, and that gives you the number of shares. And then we'll reference that number of shares here. This is all stuff that we've learned already. And that should have calculated all the way to the bottom here, which it did. And then we'll just take this same formula and apply it here. So we do this 469, which is what was bought for that $10 million, and divide it by that. So we have 20.73. The column sums up to 100%, and we should be good to go. So if you're savvy here, you'll notice that this does not equal 15%, it equals 11.89%, and we'll correct that in the next video.